Hey guys, it's Ryan with Big Dog Investing. Thank you guys for tuning into my channel. If you guys could do a couple of things for me, if you guys can go ahead and like, comment, subscribe to my channel if you guys have not done so already. Click the bell notification down below so that YouTube can send you guys notifications whenever I release videos. Watch my videos all the way to the end. And if you guys could share my videos and share my channel with anyone, I'm trying to grow my channel as much as I can, and I definitely need your guys' help in doing so. Getting started today is going to be Monday, March 13th. In this video, we're going to have a lot of information to cover. We're going to do it pretty quick. We talked about in the last video how President Biden was going to be releasing a statement. He did do that. We're going to talk about that, where the market headed, how the banks were affected today, and then we have a little bit of information to talk about, especially with the CPI report coming out tomorrow. So make sure you guys tune in all the way to the end of this video. The total market cap for all cryptocurrency right now is $1,081,000,000,000. This is a 6.19% increase on the day. Bitcoin right now is currently trading at $24,455. Ethereum is trading at $1,679. And XRP right now is currently trading at 37.21 cents. Bitcoin has had a pretty decent gain, and the reasons why this has gone up, in my opinion, is because CZ of Binance, so he's the CEO of Binance, he came out and says, given the change in stablecoins and banks, and what he means by stablecoins is that USDC got depegged over the weekend. It is now currently repegged back to the US dollar, but because of the depegging of the stablecoin USDC, as well as a lot of uncertainty with banks, with the funds not knowing if they were going to be FDIC insured up to 250,000 or if more was going to be insured. CZ decided that he was going to convert the remaining of the 1 billion industry recovery initiative funds from BUSD to the native token, including Bitcoin, BNB, and Ethereum. Some fund movement will occur on chain for transparency. And I do agree that it is nice to be transparent. So, in my opinion, this was basically a manipulation of the price for Bitcoin to increase. Now, whether it's going to stay at this price, that's to be determined. That's going to be affected by the CPI report. And then also, if CZ is going to be reallocating the funds back into a stable coin and back into the banks in the coming days or possibly by the end of the week. That's up for discussion, but hopefully he's going to be transparent if he does do that. If he does change that 1 billion back from Bitcoin, BNB, and Ethereum back to a stable coin, I do see the price going to drop just because it's a huge influx of money into the system and a huge takeaway if he does decide to convert it back. But he did point out that the transaction took 15 seconds and cost $1.29. Imagine moving $980 million through a bank before hours on a closing on Monday. And I completely agree with this. The amount of money you can transfer as well as how fast it takes is just ridiculous for cryptocurrency compared to the traditional banking system. And this is why banks need to change their systems. Otherwise, in my opinion, cryptocurrency is going to be taking over, especially the financial systems. And I do see that the banks are going to end up not just changing their financial institutions, but they're also going to utilize cryptocurrency in doing that because it's just faster, and it's a lot more cost efficient for banks to do it. And also, it's more transparent for banks. Anyone can go on the blockchain and look up if you guys have any sort of technical skills. You can look up when and how much money has been transacted through the blockchain network, and it's all right there. And I do think that the federal government wants this because it's going to be a lot easier to look at taxes, how much money is being sent to individuals through their jobs. And it's just going to be a lot better for them, essentially tax wise. Getting into our biggest gainers, though, for the day, CFX is continually to be the biggest gainer, up 35.1%. RPL Rocket Pool is going to be up 13.9%. And then OKB is going to be up 13.1%. Bitcoin is up 9% on the day, and that's in the top 10. Bitcoin's the biggest gainer. Getting into the week, though, if we see that it's still in red, the day we're in green, but on the week we're still in a red. So the majority of all coins are going to be lower. But as we can see, Bitcoin is up 8.5% on the week. Now, there are bigger gainers, but in my opinion, as long as Bitcoin holds where we're at, we're going to see a massive influx of more money into the crypto space. But it all also determines about how the CPI report comes out. Getting into our Watcher Guru news, Silicon Valley Bank sued by shareholders for fraud. And I definitely think that this lawsuit needed to take place. It was crazy how much money got infiltrated into the bank, and then how much money actually left. And what I mean by that is the CEO took $3.6 million in stocks. The CEO sold those 12 days before the bank went under. The CFO and the CMO also sold stocks within that time period. So, in the last 12 days before the bank closed, the CFO, CEO, and CMO all took $4.4 million combined in shares and sold them. Did they know that this was going to happen? Did they realize that their balance sheets weren't adding up and basically the bank was going to go under? So might as well try to take advantage of it because we're in a position of knowledge. That's considered insider trading. What also came out today was White House says Silicon Valley Bank is not in a bailout. They're not calling it a bailout, and this, in my opinion, is ridiculous. What they're doing is they're not calling it a bailout, but they're calling it a backstop. So basically, they're just changing the term of the definition of what a bailout is. So they're saying that none of the burden's going to fall on the taxpayers, which is complete bullshit. We all know that that's actually going to happen. They keep on saying this. And changing the terms. They've been doing it by saying that we're not in a recession. Now that they're saying that this is not a bailout. But when the federal government comes in and uses its power to basically say that don't worry to the Silicon Valley Bank customers as well as Signature Bank, we have all of your guys' funds. We promise. They're going to use taxpayer dollars, in my opinion. They're just not wanting to say it because they don't want to cause a mass panic. The Federal Reserve launches investigation into the collapse, and this again needs to happen. So it was nice that this lawsuit came out, as well as now the Federal Reserve is going to launch this. Jim Cramer urges investors to sell their Bitcoin. We know that basically, whenever Jim Cramer says something, again, no financial advice, do the opposite. I'm not going to be buying any Bitcoin, though. Like I said, I'm not a huge fan of Bitcoin. I do consider it the gold standard, though, for cryptocurrency right now. It has been, and it always will be, in my opinion. But for you to make money, so for you to 4x your money, essentially Bitcoin right now is roughly 25,000. It needs to get to $100,000 per coin for you to essentially 4x your money. You can do that easier in other cryptocurrencies, in my opinion. But I'm not going to be buying Bitcoin, but everything else follows Bitcoin. So use that knowledge with what you guys will. Jim Cramer's been wrong several times in the past. He was talking about how people needed to buy into Silicon Valley Bank, and then now, not even 6 months later, it closes its doors essentially, unless they can figure out a way to save all of those funds, get those funds back. But the CEO, the CFO, and the CMO all need to be out of that bank. Obviously, they mismanaged funds, and they should no longer hold their positions. Bank giants JP Morgan, Chase, and Citigroup are trying to handle largest movement of deposits in over a decade. And this is because a bunch of people went on a bank run. They wanted to go and make sure that their money was safe. A lot of people use Silicon Valley Bank and Signature Bank. A lot of corporations did, and small businesses. So they had to go there and take out that money. And what they did is, now what they're doing is they're taking out the money from those two groups, but also from JP Morgan, Citigroup, Bank of America, Wells Fargo. Everyone was on a bank run today. They were pulling out cash because they were worried about the financial systems, and every right to be so. I was worried too. I didn't pull money out of the bank myself, but people were doing that, especially businesses, because they were needing to make payroll. A lot of people have to pay their employees, and they took that money out, and they're going to hold that money in cash, in my opinion, because they're going to need to be able to pay their employees for the coming months until this investigation comes out and officially we see what happens with the banking institutions. Citadel CEO says US capitalism is breaking down before our eyes after the Federal Reserve rescued Silicon Valley Bank. And in my opinion, I kind of agree with this. You know, we're basically not in a capitalist market anymore. We're having the government come in and basically seize control. This is more of an authoritarian market, because they're basically coming in and trying to basically manage everyone's funds and businesses. And in my opinion, that's completely wrong. This needs to be done at the institutions themselves. They need to be held accountable for their actions. The federal government does not need to come in and do this. The CPI report comes out tomorrow. So I wanted to show this on Google right here. It shows that a bunch of people are talking about this, but a bunch of people are saying that the numbers aren't going to be as bad as everyone says that they are. So I do believe that this report is going to be coming out better than what was expected. But the reason why I say that is because right now, especially with the banking crisis, they want to look strong. So what they're going to do is they're going to fudge the numbers around. They're going to make it look like everything's going great. So inflation, in my opinion, is going to go down for February because we do the previous month for the CPI report. I do think that the numbers are going to be better than expected, but I do believe that the numbers are going to be fudged. Now, again, no financial advice, but with this, I do see stocks and crypto going up essentially because of the better data. But I still see that the Fed is going to raise interest rates 25 basis points because they want to stay strong. They want to come out and say like, hey, even though that the CPI report was lower, we still want to make sure that we curb inflation. So they want to be proactive rather than reactive. Because it comes as a position of strength by doing this, but it's still going to be hurting the American people who haven't bought a house yet, people who haven't bought their car yet. Those people are the ones that are going to hurt from this. And it's, in my opinion, it's still going to not curb inflation. We still see gas prices going up. Gas prices in my area are up 20 cents per gallon in the last 2 days. So a bunch of this is coming out. So I do see a better CPI report. We're going to talk about that in the video tomorrow, and then how the markets reacted. Biden delivered a speech. So everything that I talk about is going to be in the comments. So on CNN, I was one of the only places that I can find the full one. A bunch of people were taking videos and snippets of of President Biden's speech, never giving out the full report or the full video. So I wanted to make sure that this video is going to be posted in the comments. I can't figure out still how to put videos in or embed them. So they're going to be in the comment section. Copy and paste this, watch this video. Biden delivers remarks on this. Now, in this though, Biden came out in the video. This is one of his key uh, comments right here. It says, during the Obama and Biden administration, we put tough requirements on banks like Silicon Valley and Signature Bank. I like how he only calls out those two because those are the two that went down, including a Dodd-Frank law to make sure that the crisis that we saw in 2008 would not happen again. The last administration rolled back some of these requirements. So they rolled back some, but not all. Joe Biden still has not taken accountability for anything that has gone wrong while he's in office. It's always the last administration did this, the last administration did this, the last administration did this. And that's complete bullshit. Start taking some accountability for your actions. Obviously, what you've done has not been enough for the American people. They want accountability. When they were asking him questions after the press conference, after his speech, he basically walked out the door, didn't give any didn't answer any of the questions that reporters had for him, and he basically took a plane ride. And that's essentially what happened. And in my opinion, that's completely wrong. The American people were worried about their money. He should have been there to answer questions. That's what you're supposed to do as the president of the United States. And in my opinion, he did not do his job today. He also says right here, we've come a long way in 2 years. And now the biggest threat to our recovery is House Republicans' reckless talk on default. We should be building on our progress, not going backward by defaulting on our debt. And I completely disagree with this statement 100%. This is, again, shifting the blame. House Republicans are going to be at fault. They're the biggest threat to our recovery. Just like Republicans are our biggest threat to our democracy if they didn't vote a certain way during the elections. This is complete BS. This is, again, deflection, 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 and then targeting a specific group. He's supposed to be the president of the United States, president of all, not just his political party. So make sure that you guys do this. And a good example is this. It says right here, we should be building on our progress. If I bought a house and I was renovating that house and I didn't have the money to do that, okay, I can't just magically pull money from any which way to finish the house. Obviously, I have to wait, figure out my money situation, and then I can build on that. And that's what he's essentially saying is we just need to keep on adding debt, just keep on adding debt, because we just got to just, finish it, and then everything's going to be okay when it's done. But in my opinion, that's completely wrong. This is why credit card debt is just drastic here in the United States. It's at an all-time high, that it's the highest it's ever been. And they want this to happen because they want these interest rates to keep going up. They want the American people to hurt so that they are reliant on what the government needs. Biden also came out and says on Friday, the FDIC, the government regulator in charge, took control of Silicon Valley's assets. Over the weekend, it did the same with Signature Bank. Here's what comes next. So he says everyone had their deposits at those banks can access the money today. This includes small businesses that need to pay their employees and stay open. No losses will be borne by the taxpayer, which is, in my opinion, wrong. We'll pay for it from the fees that the banks pay into the deposit insurance fund. So banks pay a fee into this fund to basically ensure all of the money that is lost is actually insured. So like if a smaller bank loses a little bit of money, if they paid into this fund, they can access that money, and then that's like their insurance money. So it's like if I got sick at work, if I wanted to at my work, we have a policy that I can basically put one sick day in, and it's in a pool. And if I get sick, like let's say for whatever reason I get, into a car accident and I'm out of work for 3 months, I can use those pool of sick days because I paid into the system and now I have access to that. The management of both of these banks will be fired. So again, this is what needed to be done because obviously that they failed. If a bank is taken over by the FDIC, the people running that bank shouldn't work there anymore. I will 100% agree with that statement. Investors in the banks will not be protected. They knowingly took a risk, and when risks don't pay off, investors lose their money. That's how capitalism works. Now, should that happen when the fraud takes place? I'm indifferent on that. We must go at full accounting of what happened and why some of those are responsible can be held accountable. In my administration, no one is above the law, which, in my opinion, is wrong. Talk about his son. We won't get into that, though. We must reduce the risk of what's happening again. During the Obama administration, we placed tough regulations. This is where, he comes out and says that Trump was at fault for this. He says he's going to ask Congress and banking regulators to strengthen the rules for banks to make them less likely for this kind of bank failure happening again. We must protect American jobs and small businesses. I'll agree with that statement. We must protect American jobs and small businesses. Obviously, that hasn't taken place yet. So we'll see what comes of this. So Meta Lawman comes out and says what we know about the banking sector so far, that this isn't over. The First Republic is at 60% down. Zion Bank is at down 30%, Key Corp 25%, Triest 18%. The Fed and Treasury are unlikely to let any uninsured depositors take losses once bailout begins. It's hard to stop. The Fed rate increases may be over. JP Morgan has listed a great report about the banking sector. The report shows where capitalism ratios go if banks were forced to go into market to market for their assets with unrealized losses. So, unrealized losses, in a sense, are the money that they invested into other areas. If they needed to pull those out, they're at a loss right now. And in my opinion, banks don't actually have their assets on hand, and their unrealized losses are going to basically not be able to cover where their debts are at. So it's going to be interesting to see what happens. Zach Rector says, flipping the switch is off right here. A lot of the banks and stuff, their stocks basically got halted. So any smaller bank that was institutionalized through Signature or Silicon Valley Bank, a lot of people were selling their stocks. They got sold at a drastic measure. And in my opinion, it's wrong to halt the stock selling, but that's exactly what happened. People were calling that there wasn't a bank run. The federal government came out and says, there was no bank run today, which in my opinion is a complete BS. There's pictures right here of people lining up at these banks, these smaller banks that are attached to Silicon Valley Bank or also attached to Signature Bank. They're lined up. They're trying to pull their money out because they're worried that that money's not going to be there tomorrow. Um, Bet David comes out and says that there's 4 laws that are, institutionalized for economic freedom: freedom to buy, freedom to sell, freedom to try, and freedom to fail. The last one sucks, but if we don't allow companies to fail, we indirectly give permission for irresponsible behavior. Bailouts or backstops, whatever you basically want to call them, are another form of crony capitalism, and I completely agree with this. Those banks and institutions failed. They should be failed. Okay, those people that were put in charge of those banks should actually be required to pay fines. That $4.4 million in stocks and stuff that was sold, that needs to be given back to the bank and distributed to the actual customers, because they knowingly, in my opinion, again, I don't know the full story, but they knowingly took that money knowing that that bank was going to fail. John Deaton comes out and says that we do not live in a free market. Capitalism is being killed. And this is because this guy Warren comes out and says that there's an Operation 2.0 choke point that is taking place. Today, I heard from the management of a small U.S. bank. And in this, there's a little text message report right here. It says today, basically every bank regulator is calling every bank and asking for their liquidity report, asking whether they plan to apply for the new Fed program, and asking whether they have any exposure to crypto. And they definitely trying to ensure that smaller banks do not touch this area. And in my opinion, banks should not be touching cryptocurrency. Right now, there's no clear guidelines and regulations with this. Right now, the federal government needs to come out with clear guidelines and regulations for cryptocurrency before it can actually be bought by these institutions. Now, if you disagree with that, put that in the comments. But this is how, banks and basically people who have their money in banks get killed. And in my opinion, is completely wrong and irresponsible for these execs and banks to basically be buying and selling stocks, using customer funds to being able to do so with basically no risk. Now, the risk now is you're fired from your job if the FDIC takes over. But those individuals who had their money in those banks are at a loss now if the federal government doesn't come in and ensure all of those funds are safe. Tucker Carlson suggests that the government will use the bank failures as an opportunity to install their own digital currency to control your finances. We've talked about this several times on my channel. Right now, China's trying to institute a little bit of this. Basically, you can get paid in a cryptocurrency, and in that cryptocurrency, there's a timer. Then it's not officially installed in their country yet, but they've done tests with it where basically, if I get paid, on a Tuesday every week or a Monday or whatever payday is Friday. With that, there's a timeline and a timestamp on my cryptocurrency that has an expiration date. If I don't sell that asset, if I don't sell that cryptocurrency, put it into the market within like a number of years, let's say 1, 2, 3, or 5, even 10 years, that money is lost. It's no longer my money. And this is basically a way of allowing the American people to be required to work until they die. You will not have financial freedom if this does take over. And in my opinion, we need to make sure that this stops and this isn't allowed. Right here, this guy, Pat David, again says, look at the FDIC's balance sheet. FDIC only has 125 billion, securing 9.9 trillion dollars. That's only 1.26%. So they only have 125 billion dollars in assets, securing 9.9 trillion dollars worth of money that's in these banks. The FDIC may be able to protect the depositors of Silicon Valley Bank, but it won't be able to do so if it happens to a few other banks. These would include our big banks like JP Morgan and Chase, Citigroup, Wells Fargo, Bank of America. All of those would be affected, and we would not be able to insure those using the FDIC's funds. They only have 1.25% of all of the assets. That's ridiculous. Zach Rector says everything is fine because the U.S. system in the federal home bank loans, a key source of cash for regulating banks, is seeking to raise about $64 billion through the sale of short-term notes, per Bloomberg. And he puts a crying face. Everything is fine, because everything is not fine. The housing market's going to collapse, in my opinion. The financial institutes are going to collapse. Stock markets are going to go down. And in my opinion, I see crypto going down a little bit. Also, we're seeing slight increases because as banks go down, people are like, well, I want access to my own funds because obviously we can't trust the banks. What do? They're going to put it into cryptocurrency. We're going to skip this one. Zach Rector also says, let's go. As of just 2 p.m., estimated sales of silver and gold at APMEX are now totaling the highest day I've ever recorded for both metals. And there are still 10 hours remaining. So a lot of people are securing gold and silver. These are your physical assets that aren't connected to a monetary system. And in my opinion, if you guys like the traditional aspects, gold and silver, in my opinion, are safe plays in the markets. This was really interesting too. Hedera came out and they partnered with Starburst for a little metaverse. So as they've announced the upcoming launch of their Juicyverse in collaboration with Mars Global and Bamboo Meadow, where fans can create and share digital art like the metaverse built on Hedera. So this is just showing that there's more utility with the Hedera market. It's really cool seeing a big candy company like Mars being able to actually partner with Hedera. I do see Hedera, their token is HBAR, still going up in value. I know that they had a little bit of a hiccup with their systems, but they're all back fully online now, and I do see that this token is a great asset, has a lot of utility to it. Jay's Case Filen also wanted to report on this. Basically, this Suzanne Friedman came out and reminded Elizabeth Warren that crypto is a legal industry within the US and globally that deserves to be banked. And if you guys want to, you guys can read this. But basically, they're saying that, if you guys have money in cryptocurrency, you should be able to have that insured by the FDIC also, in a sense, is what they're saying. They should be trusted. Stuart Alderati came out and said that they wanted to thank Ro Khan for the leadership to make Silicon Valley Bank depositors whole. Some may decry venture capitalists in tech, but this includes startups tackling hugely important problems with healthcare, climate change, AI, fintech, national security, and yes, sometimes even crypto. A postmodern more term is sorely needed, and accountability and regulatory gaps should be addressed. But depositors did nothing but place their cash in a bank that in turn invested in government backed debt. This isn't risk taking, this is conservationalists. Now, I completely agree with this. It's nice to see that these individuals, especially these small institutions, these small companies, and even customers that had their money inside these banks, they took no risk. Our financial markets tell us to put money into the bank. It's safe. You can keep it there. If you guys live at home, you guys don't, put your guys' money into walls anymore like used to be done in the past, or underneath the mattress. Because what happens if someone broke into your house? What happens if someone, your house, whatever, happens where your house catches on fire? All of your money's lost. You can say, oh, I had, $200,000 underneath my mattress. Can the federal government give me that money? No. So we're told to be putting this money into these institutions, and these institutions took advantage of this, and they invest that money into high risk assets, or they take that money for themselves, like we just saw with the CEO, CFO, and CMO of Silicon Valley Bank selling their shares of the stock to basically profit before the collapse. And this is what happens when people get super greedy at their positions. This is why, in my opinion, there needs to be salaries for these individuals, but they should not be paid these huge bonuses based on performance, because that gives them all the opportunity for them to fudge numbers, take advantage of the average individual with the customer funds, and basically look like they're doing something to get paid more money. Now, we're going to leave it there. The CPI report comes out tomorrow, so make sure you guys watch that. I'm also going to be talking about that in tomorrow's video. Thank you guys for your guys' time. If you guys can invest with the big dogs, stay on the porch. Have a good one.